Now we have trend trading strategy. So guys, this is one of the easiest strategy to follow, easiest strategy to understand, easiest to execute, and there are like huge profit margins to it because the losses in this are very small. So what are the components of this strategy? Trend identification on a higher time frame and full body bar on a lower time frame. That's it. That's it. Identifying trends and ranges. So you guys have to be able to identify the trend, okay? Because we will be trading in the direction of the trend. So in order to identify the trend, we need two things. We need the color of the last four bars and we need the close of the last four bars. Okay, that's it. Though that this is the only information we need. Color of the last four bar and the close of the last four bars. Close is very important and color is also very important. So the criteria for a trend to be in an upside momentum. First one, last three bars are of green color. If the last three bars are of green color, last recent three bars are of green color, trend is up. Without any doubt, the trend is up. Without a doubt. Second, close of every bar is higher than the previous bar. The close of every candle is higher. Obviously, if the color is green, the close is always is gonna be higher. Okay, because green candle itself portrays that market has closed higher than it has opened. Okay, and the third is close of all three bars is not happening inside the range of any bar that happened prior to these three bars, which means these three bars should not be inside the high and the low of any prior bar. Remember, I that's a criteria of a range. When candles close within the high and the low of a bar, then the range is formed, right? So if three bars are inside the high and the low of a bar, there is no trend. The market is in a range. Okay, so these three bars should be making new highs and should not be within the high and the low of any bar. Okay, so another criteria for a trend to be in upside is three out of last four bars are green. Simple, right? Second, close of any two bars should not happen inside the range of any previous bar. Means no two bars should close within one bar. No two bars should close within the range of a prior bar, except when the fourth bar makes a fresh high. Look the first image on your left side. Two bars, two bars, the middle two bars, the second bar and the third bar is closing within the first bar. But the third big green bar on the in the picture in the left hand side is making a fresh new high, and the color of the last three bars out of four bars is green, hence the trend is up. So what's the third criteria? Close of all four bars is not happening inside the range of any bar that happened prior to these three bars. Simple, I explained you just a moment ago that all these bars should not be inside the high and the low of any big bar that happened prior to these. Okay, simple, right? If the three out of last four bars are green, market is an up. If no two bars should be closing inside the range of any bar except when the fourth bar makes a fresh new high. Simple. It's very simple, guys. It's very simple. It's just black and white game, okay? Sorry, green and red game. color game. So it for a downtrend, it's totally opposite than we were what we were talking about in uptrend. Last three bars, last three bars are of red color. Close of every bar is lower than the previous bar. Close of all three bars is not happening inside the range of a bar that happened prior to these three bars. Simple guys, very simple. Market, you see three red bars, market is in a downtrend. Simple. Okay. The trend will be down if the following is true. Three bars out of the last four bars are red. Okay, as you guys can see in the picture, three bars out of last four bars are of red color, which means the market is in a downtrend. Okay, that was the second criteria. Close of any two bar should not happen inside the range of any previous bar except when the fourth bar makes a fresh new high. I think I made it pretty clear when we were talking about an uptrend. Look at the first figure on the left hand side. Two bars has closed within the range of the first bar, but the fourth bar made a fresh new low. Okay, that's what I'm talking about in the second criteria. Fourth bar, except when the fourth bar makes a fresh new high. Okay, then only two bars are allowed to close within a candle and the trend to be still in a downside. All right. Additional lesson. Okay. All right. So identifying trends. So you guys know that the first criteria, we'll talk about an uptrend first. The criteria of an uptrend. If the last two bars are of green color, then the trend is up. Okay. We'll go by like this. Okay. Look at the right side of the chart. In this case, last three bars are of green color and each bar is making a new high. You guys can see that, right? New high. And let's move now. Tell me, is it still in an uptrend? Yes, because if there's one red bar, we'll look at the last four bars. One, two, three, four. Well, I'll get this closer. Okay, one, two, three, four. Okay, three out of last four bars are of green color. Now, now the market is in a range because two bars have closed within a bar. Now the market is in a range. Now market is still in a range. Why? Because these three bars are closing within the high and the low of this green bar. Market is still in a range. The close is still within this. I'll mark it down using horizontal lines so that it's clear. Market has to come and break close above or below this line in order for any trend to appear. If the market closes stay in this high and the low of this bar, the market will be in a range. Market is still in a range. Now see the close of the recent bar is outside this range and the last three bars are of red color, and the closes of each bar is below, consistently below. They're making new lower closes. Okay, let's take this off. Now the trend is down. Now what? Trend is still down because 3 out of last 4 bars are of red color. Now trend is in a range. Why? Because 2 bars are green and 2 bars are of red. Match is tie. No one's winning. Not the buyers are winning, nor the sellers are winning. Now, now the trend is up because 3 green bars making new higher closes. New This bar make a higher close, this bar made a higher close, this bar made a higher close. How about now? Still, the trend is up. See now even though this, yeah, still the trend is up. Why? Because these bars, last 3 bars are of green color and they're making higher close. Market is in the uptrend. Market is still in an uptrend. Now, so 2 bars have closed within a range of a prior bar. If this bar would have been a green bar, market still would have been in an uptrend. But as this is a red bar, and we saw the two close of this candle and this candle is within the high and the low of this candle, so the market is in a range. Market is still in a range. It has to break this high and the low in order to for it to come into a trend. So now it, although it did came out of the range, gave a close below this range, but as we are counting, we got red, green, matches tie. Okay, market is in a range. Now, out of last 4 bars, 3 bars are of red color. Market is in a downtrend. Market is, let's see what color is that. That's a red color. Market is in downtrend. Okay, because last 3 bars are of red color. Now what? Because these 2 bars were of red color and were closing between the high and the low of this red bar, but it was still an up a downtrend. But now this green candle came in and gave a close within this candle. Okay, so now the market is in a range. Now market is still in a range. Market has to break out of this. Now mark, although it did break out, but as we are counting, red, green, red, match is tie. Market is in a range. Market is in a range. Red, green. Market is in a range because 2 bars have closed within the range, within the high and the low of this bar. I call the distance between the high and the low as a range. Market is in a range. Let's just stop it and we'll go to different chart. Go down to a 5-minute chart. That way it'll be easier for you guys to understand.
So now what? Red, green, red, green. Matches tie. Market is in a range. Now let's put some horizontal lines in. So there was a range of these two bars, right? But I guess the market has closed below it. Let me see. Ah, yes, yes, yes. So we'll see the color of the last three bars: red, red, green, red. Last three bars out of four bars are of red color. Hence the market is in a downtrend. Market is in a downtrend. Market is in a range because two bars has closed within this red bar. Market is in a range. Three bars has closed within this candle. Market is in a range. Market is still in a range. So now this was the low of this bar. The market has given a close below this bar, the low of this bar, and the last three bars are of red color. So the market is in a downtrend. Market is in a range now. Why? Because two bars has closed within a range within the last two bars has closed within the range of this bar. Market has to break this in order to come into any trend range. Now we got three consecutive green bars making new higher highs, and this bar give us close outside this range. Market is in an uptrend. Market is in uptrend. Market is in uptrend. Market is still an uptrend. 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 Now the market is in a range. Now the market is in a downtrend. Last three bars are red color. Now the market is still in a downtrend. Now the market is in a range. Market is in a range. Market is in an uptrend. Last three bars are of green color. Last three bars out of the last four bars are of green color. Market in a trend, 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 uptrend, uptrend, uptrend. Okay, see this bar, the high of this bar is above the high. Sorry, the close of this bar is above the high of this bar. So the market is in an uptrend. Now the market is in a range. Market is in a range because two bars, actually three bars, has closed within the range of this bar. Now the market is still in an uptrend. Still in an uptrend. Oh, sorry. Mark here the market was in a range. Market is still in a range. Market is in an uptrend. Last three bars are of green color. Market is in a trend. Market is still in an uptrend. Market is in a range. No, actually, yes, it's in a range now. Red, green, red, green. Market is in a range. Market is still in a range. Market now it's in a downtrend. Last three bars out of the three bars are of red color out of the last four bars. Red, red, green, red. Market is in a range. Green, red, red, green. Now the market is in a range. Green, green, red, red. Now the market is in an uptrend. Three consecutive green bars making new high closes. Market is an uptrend, 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 uptrend. Now the market is in a range. Two bars has closed within the high and the low of this bar. Market is still in a range. Market is still in a range. Market is still in a range. Now the market is in uptrend. Why? Because market has closed above the range of this bar, and last three bars out of the last four bars are of green color. Market is in a range, red green red green. Market is in a range. Now the market is in a downtrend. Why? Because red green red red, this bar is making a new lower close. The market is in a range, red green red green red. No, the market is in an uptrend now because green red green, and it had made a lower close, so now that range is this low high and the low of this bar is invalid. It cannot make the trend into a range. Let's move on. Now two bars has closed within the range of this green bar. Market is in a range, market is in a range range. Let me make it clear for you guys. Sometimes this can get complicated, so the bottom line is practice it as much you guys can so that it's easy for you guys to spot a trending market and a downtrending market. So all these closes are within the range of this candle. So that's why market is in the range. Now the market is an uptrend. One, two, three, four. Last three bars are of green color. Uptrend, uptrend, range, range, uptrend. So guys, this is how we spot market for it to be in a downtrend or an uptrend. Last three bars are of green color. It's an uptrend. Last three bars are of red color. It's in a downtrend. Last three bars are of green color out of the last four bars. It's an uptrend. Last three bars are of red color out of the last four bars. Market is in a downtrend. Simple. And make sure the close of the recent candle is not within any prior candle high and low. Okay, so that's it for this video. I'll see you guys in the next video. We will be talking about full body bars and more.
So now we will be talking about full body bars. Full body bars are just, as I say, they have a body bigger than its wicks. That's it. Simple. They have a body bigger than its wicks. That's it. Done right there. Because we use these full body bars going against the long term trend, and we try to fade the short term momentum. So the criteria of this full body bar is the wick is smaller than the body, and the body is at least 50% 50% or more than the either wick, either the top wick or the bottom wick. Okay, 50%. So guys, now we have learned about identifying market trends, trend up and trend down. Then we have talked about full body bars. Now we will combine both of them. First thing we have to do, for our example, we'll use a 10-minute and a 3-minute time frame. 10-minute to identify the trend and 3-minute for full body bars, because 3 minute we will use the 3 minute as a lower time frame for to initiating our entry. So the step one is to look the trend on a 10-minute time frame. Okay, and then let's say the trend is up, then go down to the lower time frame, which is at 3 minute, and look for a full body bar. Trend was up, so we gonna be looking for a full body bar of red color. All right, red color. Once you see a red color, you buy, and buy on the close of that full body bar, and immediately put a stop loss 1 point below it. If you do get stopped out, enter a buy stop order again near the close of that red bar. And once you get filled again, you put the stop loss again 1 point below that candle. If market gave you another lower close on a fresh candle, you buy the close again, given that the trend is still up. Okay, then repeat this process until you get a winner or until the trend changes. So let's say and you got in and market starts going in your favor. Your take profit would be 1.5x the ATR from your buying point. What is ATR? ATR is just a normal indicator, average true value. You can just find it in any trading software, ATR. Okay, so I'll give you guys an example. All right. So looking at the 10-minute chart, the trend was up on a 10-minute chart, right? Then we waited for a pullback for a full body bar on a 3-minute chart. Look, the market gave us a full body bar at 9:54. We bought it on the close, but the market stopped us out, went down. It gave a new close, candle close at 9:57. We bought it again, but the damn market went down, giving us a loss again. And there was another full body bar at 10 o'clock. We bought it again, putting a stop loss 1 point below that candle, and there you go. Market went in our favor, giving us a big, big, big winner. Okay, $800 winner. Guys, how much time it takes you to make $800? Tell me. And that's US money, US dollars. $800 is like, I think $800 is like $1,100 US. So it would take you around like a week and a half, and that was just 15 minutes, 15 to 20 minutes. Imagine the type of money you guys can make. Okay, welcome traders. Welcome to our video. In this video, we'll be going over some examples of trading strategy. Okay, how we can spot the trend, how we can find those full body bars, where to buy, how much to buy, and how much to let it go in our favor. Okay, so okay, let's look at the screen now. And this at the bottom of this screen on my right hand side, this is a ATR. We use this as our profit target. Okay, I'll let you know guys how we use it to determine our profit target. Okay, so this is 29th August. Look at the date on the bottom of the chart. This is the 940 candle. 950, 10, 10, 10. Once, okay, I'll go over like this. Okay, now, right now, the trend is up because three out of last four bars
are of green color and the trend is up. Okay, so this candle closed at 10:10. Any candle that formed at 10:10 or after 10:10 on a 3-minute chart, if it's a full body bar, we are going to buy. So see, no full body bar right now. We are looking for a red full body bar. Okay, so trend changed. Trend was in up at 10 o'clock. So now we are waiting for a full body bar. This is not a full body bar because the wick is bigger than the body. Okay, I'll use this cruiser so that it's more visible where I want to point out. Okay, this is not a full body bar. Okay, this is the wick is bigger than the body. This is a full body bar. Okay, this is a full body bar. How? Why? Let's look. See, the body is bigger than the 50% of its wick. Okay, so we are going to buy on the close of this candle and put the stop loss 2 point below this candle. Okay, there you go. Market went up. All right, it keeps going. It's still going, still going. Let's see how much it went. Wow, it never even returned back. So this is one of the example of how massive your trades can get. Okay, if you are someone who likes to take small profits, you're gonna fall flat on your face when you see the market going big time in your favor and you're already out of the market with a small profit. Small profits are, you just have to use the take profit strategy for now, but at the end you will be going for bigger and bigger profits. So the take profit strategy that I want you to follow for the first 3 months in order to build trust in this strategy is, once you once you find a full body bar, this was a full body bar, right? We bought here and the stop loss was just below it. Okay, then what we're gonna do is see the ATR, the the ATR, how much is the ATR? The ATR was 24.74 when this candle formed. Okay, 80, let's say 80 was 25. So multiply 25 by 1.5, which equals to 25 into 1.5 is 37.5 plus 154, 20.25, 457. Let me mark down where our take profit would have been. 457.75. Okay, this would have been our take profit. Okay, the stop, this is would have been our entry. The stop loss would have been at 14. See, the stop loss, I'll illustrate using lines. Okay, just to, I want to explain a concept using this so that you guys know what to expect as you embark on your trading journey. Okay, so this is where you guys entered. Looking at the 10-minute trend, you bought here, market went up, and you were already out here, and the market keeps going in your favor. And now you're wondering what happened, why I got out early. No matter what you do, no matter how many take how many points you go for, you will have consistent losses. Even if you try to go for big wins, you're gonna have consistent losses. If you try to go for small wins, you're gonna miss out on these massive moves. Okay, so the key is
as I have explained in the examples of my previous range strategy, is that practice a single take profit strategy for about 3 months, backtesting it with that, and executing with that. And once you build a trust in that strategy in those 3 months, then start doubling up your take profits. Means if you right now, if at this point, like after 3 months, you were going for 1.5x ATR, start going for this much. What happened? Cancel it. Start going for this much, okay, and start going for 3x the ATR. Your take profit will be this, okay. Then after that, once you spend a month you on those new take profit level, 4.5x your ATR, okay. This progress will come slow because if you just try to take big wins right away, your brain, your reptilian mind would not let you, okay. And slowly keep going for, because as you will be going for bigger and bigger wins, you're gonna start getting more and more losses, okay. More and more small losses because you are trying to go for the big win, all right. And most successful traders, most successful traders in this industry, they have their lowest winning rate. I know a successful trader personally. He have a 10% winning rate, which means out of every 10 trade, he loses 9 trade and win on only one. But he make massive amount of money. How? Because his winners are monster winners. Monster winners. Once the market go in his favor, let's say like this, he entered here, right? He entered here. Once he see a full body bar, he gonna buy it again. Once he see another full body bar, he gonna buy it one more time. Once the market go a little bit further, he gonna buy one more time. And once the market pulls back, he'll buy more. He'll have a massive position on, and he will be entering into the market as the market proves him that he's right. Once the market proves that he's right, he will not take the profit. He will not close the trade. He will add to that trade because market has just confirmed that he's right. The market is going in his favor. So instead of taking the profit, why don't he just add more risk and let the trade into a monster winner instead of a decent winner? That's the strategy of consistently profitable traders. They take more losses and they take big winners. Even the number of big winners are very small. The profits far outweigh the losses on those small winners. Okay, let's move on. All right. So you guys are just going to trade one trend change. Once you guys see a trend, okay, once the trend has formed, and then waited for a full body bar on a 3 minute chart. If that trend, if the trend here would have turned into a range, once the trend formed here, if the trend would have turned into a range, you guys would have stopped trading for that day. Okay, no trading for that day. Come back the another day. Okay, let's move on to this day. All right. So market open at, this is a opening candle, opening 10-minute candle. Okay. At this point, at this point, because right now the three candles, you can manage identify the trend. Because there is a red candle, you need at least four candle to identify the trend. Now you have four candles, and out of four candles, three candles are green. Okay, so now come down to the this 3 minute chart and look for a full body bar. Okay, trend. This candle closes at 10:10, and any candle that formed on a 3 minute chart on 10:10 or after 10:10, you're gonna buy on the close of a red full body bar. Okay, so okay, 10:10 was over here. So now you're looking for a full body bar. Okay, this is a full body bar. You're going to buy, put the stop loss just below 1 point below the bar, 1 or 2 point below. Yeah, go 2 point below. Okay, market stopped you out. Then you see this full body bar. Market stopped you. ma- ma- Market would have stopped you out again. I said it earlier. Okay, at the same time, this is 10:21, right? Look at the candle. This is 10:20. Okay, this is 10:20. 10:20 close. Now the market is in a range. Did you guys see on 10:20? This is a 21. Okay, once you see the red candle closing on 10:20, you would have only took this trade, and this candle closed, 3 minute candle closed at 10:21. So 10:20, 10 minute candle closes at 10:20, telling us that the trend is in the range. We would have only took a small loss on this candle. We would not have took a trade on this candle because this candle closed after the our trend was already turned into a range, because red green green red matches tie. Okay, we are done for the day with a very small loss. Okay, what, how much is a loss? Let's calculate. Okay, we would have entered at 682.75. Our stop loss would be 79.25. 79. Look at that, it's just a 3 to 4 point loss. It's a very small loss. Your winners as compared to this would be giants. Okay, let's move on to another day. Okay, let's look at this day. Okay, this is the first candle close. 9:40 is green, 9:50 is red, 10 is green. We need one more candle to determine the trend. Oh no, market is in a range. Market is still in a range because green red. Okay, now the trend is in upside direction. Why? Green green red green. Out of last four, three candles are green. Okay, and this candle closed at 10:30. Any full body bar on a 3 minute chart at 10:30 or after 10:30, we are going to buy. Okay, so now we are waiting for a full body bar now. Okay, this is a full body bar. We would have bought here. Let's see the 10:40 candle as well. Okay, because this is there is already 10:40. This candle formed at 10:40. We would buy here. Market stopped us out. We would have bought it again. Stop loss just 2 points below. Market went down again, and this candle closed at 10:51. Look at the, this is a 10:50 candle. Trend is still up. Okay, we would have bought here and put a stop loss just 2 point below. Market went down again, giving us a loss.
Okay, trend is still up. Let's wait for another full body bar. This is 11 o'clock here. Okay, this is a full body bar. Market was still an up. We would have bought here, and the stop loss just below. It would have stopped us out once, and we're still in the trade. Would have stopped one more time, but we would have still bought again. But the and also after this is going to be the last trade. Why? Because the market has turned into a range. Two candles has closed within this candle. Okay, if it goes up, it goes up. If it goes down, we are done for the day. Done for the day with the one, two, three losses. Three, but it keeps going higher. And let's see how much is the ATR at this point. ATR is 19. So 19 into 2.5 is 40. 19 into 1.5 is 28. 28. What's the bottom? 157. 61.25 is going to be at 789.75. 789.75. Let's see if the market can go up there, or it's a losing day. Yes, it was a losing day. Okay, market just went up and came back down. See, that's also gonna happen. Market would be going to your take profit, but would come back. Okay, there's a reason I'm showing you losses in this, because no one else show you this side of trading. Losses is a big part and the important part of trading. Okay, so we would have lost four trades here and would be done for the day. Last small trades. See, small. Your stop loss would be just 2 points away. You just right, very small losses. So look at the chart, guys. So we have one, two, three full body bars. Oh, sorry, three red bars. The trend is down, and any bar on a 3 minute chart that comes after 10 o'clock, we're gonna sell it. Okay, so this is the one bar it came. We would have gone short here. It would have stopped us out. Market went up. Would have short here. Market went up again. Okay, and this bar came at 10:27. We would have gone short here over here and put the stop loss 2 points above it, because at this time at 10:27, okay, market was still in a downtrend. All right, because the recent bars were the screen red. Okay, so we would have gone short here and sold it more on a full body bar. Market going, we would have added to our winner. Okay, so that's a very nice example. Okay, let's move on to this day. All right, so market turned into a range in the beginning of the day, then it gave a nice close below this pin bar. All right, and tells us that the trend now is down because red. All right, so any bar that comes, full body bar that comes at 10:20 or after 10:20 on a 3 minute bar, we're gonna sell it. Okay, so move on, come on to this 3 minute chart. Okay, 10:20. This full body bar came in at 10:21. We would have sold it here and put the stop loss 2 point above. It would have stopped us out once, and it would have stopped us twice. And this 10:36, this bar came at 10:36. Would have gone short here and put the stop loss 2 points above, which is 87, 89.75. Okay, it would have stopped us out once. It would have stopped us once. And we would have put a buy stop again. It went down, but stopped us out again. You can see there was no close above this bar. So after stopping us out, we would have kept putting the buy stop at this point. Okay, market went down after that. We have seen this full body bar, added more, market went up, pulled back, added more. Okay, so that way we would have made profits. Okay, it's the same thing. You can go for a 1.5 ATR on this, right? In the beginning, in the beginning, just so you get good at execution. So going for 1.5 ATR isn't gonna make you profits, right, in the long run, but that will help you to stick to your rules and enable you to do flawless execution, because execution is everything in this game. Okay, once you're good at executing your strategy, right, you're not making mistakes. Okay, because mistakes are well, like they cost money in this business. So you have to be able to do flawless execution in the beginning using 1.5 ATR. And once you get good at this, once you get good at without without losing your mental composure is a big thing. One second.